we'll be first revising non-integrated system of cost accounting, and then we'll be continuing with some questions of non-integrated system of cost accounting. Sir, after this long non-integrated of cost accounting system, we'll be getting again integrated system of cost accounting. The answer is yes, but believe me, it is extremely easy if you know this non-integrated system. Integrated system will be just some of the adjustment in this non-integrated system. We start non-integrated system with raw material and stores. Try to understand it logically rather than to just mug it up. This is a stock account. This is a stock account. So it will be having opening stock. Can you tell me it will be at cost or at selling price? It will always be at cost, right? There will be no journal entries because last year closing stock of raw material will become opening stock of current year. Then there will be purchase. Raw material stores control account debit to GLA, right? Because we don't prepare cash account, we credit GLA. And all other returned materials will be written on credit side. So this will be net materials which are coming in, right? Where to use this material? Where the material is used? Either it will remain in closing, which will become opening of next year. Either it will be used in production. If it is used in production, please understand, this is where all production happens. WIP account is the place where all production happens. Why? When your goods are finished, what happens? They are transferred to finished goods account, right? When the goods are finished, it no longer remains WIP. So where all process happens, conversion of raw material into finished goods, WIP. So this is where all production happens. So all raw material which are in production will be transferred where? WIP. When it is transferred to the production department, I will be transferring it to WIP. Some of the materials are used for maintenance, services, other stores, which is not related to production. That will be transferred to production overhead. Agreed? Wages, very simple. To GLA, that is wages paid. Whether it is direct or indirect, I write it in wages control account. So only it is termed as control account. First it will write it, then it will control it and send it to appropriate place. To GLA, this is wages paid. If they are direct wages means where it is used in production. So it will go to WIP. If they are direct wages, it will go to WIP. If they are indirect wages, then it is ultimately factory overhead, right? So this is indirect wages will go to factory. This is all cost accounts. Factory overhead. Some of the factory overhead may come from material and labor. All the indirect material and labor will come in factory overhead. There will be other factory overheads incurred like common electricity bill, common wages. There are n numbers of other things which will be overhead, which will be coming in factory overhead and which will be paid. Once it is paid, it is to GLA. Right? Factory overhead absorbed. Factory overhead absorbed. Please understand, here is where your production is happening. Factory overhead will always be absorbed by production. Alright. See, salary of accountant might not be absorbed by production, but factory overhead will always be absorbed by production. So it may be absorbed in any manner, but it will be absorbed. What is the meaning of absorbed? Out of this total cost, this cost is taken away by which department? WIP. Sir, why it can't be transferred to finished goods and why it can't be transferred to cost of sales? Your answer is going to remain same. The answer is yes. Ultimately, all cost we accumulate and we send it to cost of sales. Ultimately, costing P&L account, and ultimately we find out profit. So you cannot say that every cost should go to cost of sales. Why to prepare this all accounts? Otherwise, try to understand even this. What is this? Indirect wages of factory overhead. It is going where? Factory overhead. Factory overhead is ultimately going where? WIP. Why not to send this indirect factory overhead to WIP directly? It is ultimately going where? In WIP. If you think this, ultimately everything will be going over here. So no, there is no need to prepare this all accounts. We'll be going ahead, and when we'll come to this accounts, I'll tell you what is the importance of this account. Why we are preparing this particular accounts. So absorbed will go into WIP. If there is a shortfall, if there is under absorption of overhead, what is under absorption? If you have incurred 1 lakh rupees and because of your method of absorption, there are how many methods? We cannot count it, right? Based upon total material, based upon total wages, based upon prime cost, based upon factory cost, based upon n numbers of things that can be found out. And the last chapter that we learned was ABC. Don't distribute by one blanket rate. Distribute all the overhead by different rate. But the absorbed figure was how much? 80,000. Then there is an under absorption. If it is normal, it should be transferred. See if it is normal. If it is abnormal. If it is normal, it will be transferred at 3 places. One is WIP. Equivalent units of WIP will bear this cost. We know normal loss or normal cost is always absorbed by good units produced. WIP is good unit produced. They are half produced, but they are good units produced. Also, finished goods closing stock, also cost of sale. Why? Some of the goods on which this cost is incurred are already sold. So it cannot be given to finished goods closing stock. It cannot be given to WIP. And abnormal loss is transferred to costing P&L. Sometimes they will also tell you to carry forward the amount, right? Suppose in previous question we have done this. It was monthly accounts, books of accounts. So you don't under absorb and over absorb monthly. You under absorb and over absorb yearly, right? You take a treatment of, see, it is possible in this month there is under absorption. In next month it is over absorption. Next to next month again it is under absorption. You need to take a yearly figure and not a monthly figure. So sometimes even it is carry forward. The balance is carry forward. This is factory overhead. Most important is administrative overhead. It is incurred. Now administrative overhead are always of two types. It may be direct, it may be indirect. Direct means directly related to production. And we will be changing some things which we have not done before. Directly related to production, administrative overhead should be transferred where? It should be WIP. Is it alright? We have done also WIP. We will not be transferring it to WIP. We will be transferring it to finished goods account. Why WIP is not very wrong, I'll tell you, but I'll be transferring it to finished goods account. And if it is indirect, it goes in cost of we need to change it. When we'll be doing journal entries for integrated, I will be changing this entries also. Administrative overhead absorbed, directly related to production should be transferred to finished goods, indirectly related should be transferred to cost of sales. And let me first complete selling and distribution, then I'll be coming to this again. Selling and distribution incurred to GLA. It is always transferred to cost of sales. It is always absorbed by cost of sales. Sir, if it is absorbed by some overhead absorption method, then under absorption will be transferred to costing P&L account. Over absorption will be also transferred to costing P&L account. Normally you absorb your factory overhead, not administrative and selling distribution overhead. So this will be selling and distribution overhead. And most important is WIP. Your direct material might have come, direct wages might have come, opening stock might have come. Some might be transferred from factory overhead. Factory overhead absorbs comes over here, right? You might be also incurring other expenditures in your production directly. So this is GLA. All right. We transfer WIP. See what this is doing, this department is doing actually? Production. There were some stock which was not 100% completed in previous year, so they became my opening stock. All other directly or indirectly related production costs are coming to our department. What we will do? At the end of the year, we will manufacture the goods. So this is nothing but cost of finished goods manufactured, which will be transferred to which department? Finished goods department. So journal entry will be finished goods account debit to WIP, and this will be WIP. Whatever are not finished remains closing stock of WIP. Now let us go to that administrative overhead. This administrative overhead directly related to production. Should it come over here or not? It is directly related to production. Huh? What does it mean? Quality check expenditure, quality control officer salary, some maintenance. This all are or some guy who is doing maintenance and he is hired on a regular salary. What do you think it should come over here or not? See, always this all accounts are trading account. Huh? They are stock account. Stock account is like trading account. Every time logically we make mistake because we don't write down units. See, if the figures were in units, everything would be simple. Like WIP opening was 2000 units. This year I am processing on more 10,000 units. So total is 12,000 units. This will not increase the units. Wages working on say 12,000 chairs will not be increasing number of chairs, right? So wages will not increase number of units, but it will increase cost of the chair. This we have done in process account, right? Raw material increases number of units, but wages and overhead does not increases number of units. This will not increase number of units. This will not increase number of units. Why we are adding the cost to this? Try to understand. While transferring the cost to finished goods, this all cost should be considered. Agreed? Why we are not taking selling and distribution expense? It is not a production cost which should be transferred to finished goods department, right? So we are not adding selling and distribution over here. Now what do you feel about this? Administrative overhead related to production. See, two things will be valued with this all cost. Huh? Two things will be valued. One is transferred to finished goods. Another is closing stock of WIP. While valuing closing stock of WIP, should you consider quality checking cost? Answer is yes also and no also. So it is not absolutely incorrect if you keep it over here. But try to understand this, let it be factory. Sir, quality department manager is also in factory. Agreed. But I am trying to find out manufacturing cost except this indirect cost which are not related to directly production. So let me find out only factory cost. And so a good option is not to write down administrative overhead over here and to write down administrative overhead absorbed which is direct over. Does it make any difference in our final costing P&L profit? No. Ultimately, this figure goes over here and this figure goes over there. So it does not make any difference where we add it, but you need to add it logically. All right. If I tell you the company's valuation of WIP is based upon quality control manager's salary, then it should be added in WIP, right? Then it should be added in WIP. Administrative overhead, which is indirect. This was a mistake that we have made. Administrative overhead, which is indirect, it is as good as selling and distribution overhead. Administrative overhead, which is indirect, is added. Remember your cost sheet. After COGS, administrative and selling overhead are added. So this should be transferred to cost of sales. There is no provision of transferring it to cost of production, that is in finished goods. So indirect factory administrative overhead in cost of sales and direct administrative overhead in finished goods. This is what we are summarizing. This is all factory cost. Factory ultimately will be transferring it to finished goods. Finished goods, there will be some other expenditures which will be ultimately transferred to cost of sales. Which is not transferred will remain my closing stock. What is this? Opening stock of finished goods, closing stock of finished goods, right? While valuing closing stock, understand this cost is already added, right? And it should be added. See your cost sheet. Administrative overhead related to production comes before that cost of production, right? We find out cost of production, it comes before cost of production. This will be transferred over here, and now the concept is simple. Cost of sales, I will be transferring it to costing P&L account. Whenever the sales is made by GLA, this is the sales figure. This will be also transferred to costing P&L account. In costing P&L account, here there will be sales, here there will be cost of sales. You will be getting costing profit, which will be transferred ultimately to GLA. Sir, what is this account? As we are not preparing full-fledged accounts, but we want to pass dual entry, one debit and one credit. So the accounts which we are not preparing, that figure we will be transferring to general ledger adjustment account or cost ledger adjustment account. Any name can be given. This is a general account because we are doing non-integrated system of cost accounting. We have done illustration number 1. We are going to do 6.2. See 6.2. The following balances were extracted from a company's ledger as on 30th June. Raw material control account, WIP control account, finished stock control account. And the last point is general ledger adjustment account. The following transaction took place during the quarter ended 30th September. The amount is in rupees. So you are writing your books of accounts not for a year, not for a month, for a quarter. The factory overhead allocated to work in progress is 1,36,350. Goods finished at cost 13,76,200. Raw material purchased 12,43,810. Direct wages allocated to WIP 2,56,800. Cost of goods sold 14,56,500. Raw material issued to production 13,60,430. Raw materials credited by supplier 27,200. Raw material losses because of inventory audit is 6,000. Work in progress rejected with no scrap value 12,300. Customers return at cost of finished goods 45,900. Prepare raw material control account, WIP control account, finished stock control account, general ledger adjustment account. I will be preparing practically all the accounts which I feel are necessary. You will not need administrative overhead, selling and distribution overhead control account. You will not need sales account. You will not need costing P&L account. Because practically sales is not given. Let's start. 6.2. First, raw material control account. This is opening stock of raw material 2,82,450. 2,82,450. This will be opening stock of raw material. Work in progress 238,300. Work in progress 238,300 is nothing but opening. Finished stock control account 392,500. 3,92,500 is nothing but opening stock of finished goods. General ledger adjustment account 9,13,250. 9,13,250. As this was a tallied sheet, I am giving just one effect. For any other transaction, I will have to give dual effect. One debit, another credit. The following transaction took place during the quarter ended. Factory overhead allocated to work in progress. What is this? Try to understand. WIP account debit to factory overhead. The factory overhead which are absorbed by work in progress. They are not. What comes on debit side of factory overhead? Can you tell me? Factory overhead incurred and not factory overhead absorbed. Absorbed comes on credit side, and this is this figure 1,36,350. Where the second effect will go? Credit effect I have given you. Debit effect WIP 136,350. We have passed dual effect. Finished goods at stock. Tell me, finished goods at cost are transferred from where to where? WIP to finished goods. WIP is the place where finished goods at cost are manufactured, right? So finished goods at stock comes over here by transferred to finished goods. These are finished goods at cost manufactured, which is 13,76,200. Second, it will go in finished goods account to WIP 13,76,000. What is the mistake if I write it down over here? Can you tell me? 13,76,200. What is the mistake? What is written on credit side of finished goods stock account? Cost of goods sold, right? What goes out of the finished goods department? Can you tell me what goes out of the finished goods department? They are the goods which are sold. If they are not sold, they will remain in closing stock of finished goods, right? So only goods sold. Are this cost of goods sold or cost of goods manufactured? Manufactured. So it cannot be written over here, right? 13,76,200 is the correct answer. Correct effect that we have given. Raw material purchased 12,43,810. 12,43,810. Raw material stores account to GLA. GLA account credit side 12,43,810. direct wages allocated to work in progress. See where I am writing it down. By WIP, which is direct wages. 256,800. And in WIP debit side, 256,800 to direct cost of goods sold. Can you tell me who transfers cost of goods sold to whom? Which department transfers to whom? Finished goods to cost of sales. This is 14,56,500. 14,56,500 by CO. COS will be debited to finished goods control account. 14,56,000. Raw material issued to production. Raw material issued, going out credit side, it is issued to production by WIP. It is 13,60,430. It is coming in production, so WIP will be debited 13,60,430. Raw material credited by supplier. It is practically returned to suppliers. They are returned to suppliers, not credited. Credited by suppliers, they credit us if we return them. Yes, so it might be written in, but it is returned to suppliers. It is GLA account debit to raw material control account, 27,200. Raw materials are going out. Who will be debited is GLA, 27,200. Raw material loss. Now this we are learning for first time, but it is not very much difficult. Raw material lost due to inventory audit. You have done audit of raw materials and some raw materials were missing and they were lost. First, normal reason or abnormal reason? It is abnormal reason. It cannot be a normal reason. Material lost cannot be a normal reason. Material lost by fire cannot be a normal reason. No, by earthquake cannot be a normal reason. But if the type of material is such, say plastic or glass, which is breakable and it breaks and there is a loss, it is a normal loss. So this is an abnormal loss. First, should raw material stores or control account should be affected or not? It will increase or reduce? Reduce. So 6,000 is written over here, right? Now we have not done this, but you should be very clear about it. It is lost by abnormal reason where I will transfer costing P&L account. If it is normal, I will absorb it somewhere. But if it is abnormal, it is always transferred to costing P&L account. By abnormal loss transferred to costing 6,000. 6,000 I am debiting it to costing P&L account. Abnormal loss of material. You might have not prepared costing P&L account. Believe me, my also costing P&L account is not actually costing P&L. It is just memorandum costing P&L because we are not having other figures also. 6,000. Yes, you will have to prepare either memorandum costing P&L or abnormal loss account. Again, work in progress rejected with no scrap value, rupees 12,300. Work in progress again should be credited, right? Because work in progress, some cost is, some goods are decreasing. It is 12,300. Again, it is abnormal reason will be transferred to costing P&L. 12,300 abnormal. Yes. In process costing, if it is abnormal loss, you value it at scrap value or you value it at NCN. NCN. Normal loss is valued at scrap value. Abnormal loss is always valued at actual cost. What is the cost of goods lost? 12,300. Here what should be written? 12,300. Sir, your material, if normal, what we should do? Then also here you should write down 6,000. Suppose this was normal. Why? I'll tell you. Which is this account? It is not a process account. It is a stock account. Your stock is decreasing or not? Yes. Whether it is normal or abnormal, your stock is decreasing or not? Yes. But what normal loss says? It should be absorbed by good unit produce. So I will not be transferring it to costing P&L. I will be transferring it to WIP account. Once I transfer, suppose this was normal loss. Let us take this. This was normal loss. Someone says, sir, it should be valued at scrap value, so I should write down 0 over here. No. This is which account? It is stock. Whether the loss is normal or abnormal, the stock decreases. It should be written at cost over here. So 6,000 will be written over here. Normal loss is transferred to costing P&L or it is absorbed by good unit produced? Absorbed. So this 6,000 I will be writing over here. So what, once I write down 6,000 in WIP, what does it mean? My production cost of normal goods will increase, right? So this will be effect of if it was a normal loss. But it is not normal. Work in progress 12,300 also, both places I have written. Customer returned at cost of finished goods 45,900. You have sold the goods to customer. They have returned the goods costing rupees 45,900. You need to tell me only one account, whether it will affect my finished goods account or not. Or WIP account? No, WIP don't deals with customer, right? Finished goods deals with customer. Finished goods will increase or decrease? Increase, because this goods has come back, right? So it will be written on debit side, right? Written by customer. On debit side, it is 45,900. All right. Where it should be transferred? Sales account. Sales account should decrease. But sales no figure at nothing. Here there is no sales figure. You will be transferring it to GLA, right? You will be transferring it to GLA. You may transfer it to sales account, then ultimately it will be transferred to GLA. You can transfer this to GLA. But your answer is correct. It should be practically transferred to sales account, credit side. 45,900. I have covered all the points. Nothing is pending. I can start solving the question. Raw material stores control account will be just having a closing balance. Two lakh 82,450 plus 12 lakh 43,810 minus 13,60,430 minus 27,200 minus 6,000, which is 132,630. Wages control account. There is no other figures. I will be assuming that whatever is transferred to WIP is incurred to GLA 2,56,800. GLA will be credited 2,56,800 by wages. Sir, why I have not taken this closing balance somewhere else? Because I am not preparing trial balance. They have not told me to prepare trial balance. I will not be preparing trial balance. Factory overhead only transferred to WIP is given. I will assume this is what is incurred to GLA 136,350. GLA credit 136,350. WIP opening is given, factory overhead, direct wages, raw materials, some abnormal losses, transferred to finished goods is given. Whatever is the figure will be closed. Closing, I will not be giving second effect because second effect comes in trial balance. $33, 55, 780. No, there is some mistake. 238, 300 plus 136, 350. Okay, this I have taken 13 lakhs. Plus 256, 800 plus 13 lakh 60,000 430 minus 12,300 minus 13 lakh 76,000 6 lakh 3,380. Finished goods, this will be my closing balance of finished goods. 392,500 plus 13 lakh 76,200 plus 45,900 minus 14 lakh 56,500. 3 lakh 58,100. Cost of sales is transferred to costing P&L account. I have done a costing P&L account. Let me transfer it to costing P&L. 14 lakh 56,000 14 lakh 56,000 1456. Sir, what to do with costing P&L because sales figure is not given? See, I am doing one thing. Instead of writing costing P&L account, I am writing memorandum costing P&L account. So only some figures are available. In absence of information, all figures should be transferred to GLA. This is what GLA is prepared for. 14 lakh 56,500 plus 6,000 plus 12,300. 1474,800. will be transferred on debit side 1474,800 to costing P&L. Whatever is the balance will be closing balance of 9,13,250 plus 12,43,810 plus 45,900 plus 256,800 plus 136,350 minus 27,200 minus 14,74,800 10,94,110 will be closing balance of GL. We are going to next question, which is the C6.3. The following information have been extracted from the cost records of JKL Manufacturing Company Limited. Stores, opening balance, purchase, the transfer from WIP, issued to WIP, issued for repairs, deficiency found in stock. Work in progress, opening balance, direct wages applied, overhead charge, closing balance. Finished production. Entire production is sold at a profit of 10% on cost from work in progress. Wages paid are 2,10,000. Overhead incurred are 7,50,000. Prepare stores ledger control account, WIP control account, overhead control account, costing P&L account. Again, I am preparing all the accounts. Whichever accounts I will not require, I will not be using it, like administrative overhead control, selling and distribution overhead control will not be prepared in your case. WIP, finished goods, cost of sales, sales, costing P&L, everything I will be preparing. General ledger adjustment account is always required. They are telling us to prepare general ledger adjustment account. No, we will not be preparing general ledger adjustment account. Second effect we will be ignoring, right? If it is coming in GLA, we will be ignoring. Opening balance of stores. So these are raw materials. Opening balance of raw material comes in raw material control account, debit side, opening balance 90,000. Purchases also comes in debit side, 4,80,000. We don't need to prepare GLA account, so we are not giving credit effect. Transferred from WIP. WIP has transferred the goods to stores department. What is this? Return of raw materials from production. So in WIP it will be credit side, in raw material it will be debit side. Transferred from WIP is 2,40,000. Here I will have to give another effect in WIP. Issued to WIP 4,80,000. Reverse entry. Issued for repairs in raw material stores account with side. Credit side, because it is issued 60,000. Second effect, where it will go? Production overhead or factory overhead. 60,000. Deficiency found in stock. 18,000. Will I treat it as normal or abnormal? I'll always treat it as abnormal. If it is normal, it should be given. If it is not given, I'll be treating it as abnormal. Abnormal will be transferred to costing P&L account. 18,000. They have treated it as normal. Let us also treat it as normal. But I think if nothing is given, you can treat it as abnormal and transfer it to costing P&L account. Deficiency found in stock. 18,000. We are treating it as normal. Should increase the cost of production. I will transfer it to WIP. I told you we will be transferring it to WIP. The answer is no. Why? WIP records what? Directly related to production. It will go in WIP. But it is not a direct expenditure. It is a indirect expenditure. So it should be routed it through factory overhead. Ultimately, it will go in WIP. 18,000. Opening balance of WIP is 1,80,000. Direct wages applied is 1,80,000. What is this? Direct wages applied, incurred, absorbed by WIP, right? 1,80,000 is absorbed by WIP. WIP debit 1,80,000. Overhead charges 7,20,000. What is this? Overhead incurred or overhead applied? Overhead charged. How incurred? What is the wordings? Overhead charged. What is the heading? WIP. This is overhead charge in WIP. Overhead charge in WIP is overhead absorbed. 7,20,000. And it will be factory overhead absorbed by closing balance of WIP is 1,20,000. Finished production. Entire production is sold at a profit of 10% on cost from WIP. Wages paid is 2,10,000. Help me out. Wages paid is 2,10,000. To GLA? 2 lakh. I am not preparing GLA account, so I am not giving second effect. Overhead incurred is 7,50,000. Factory overhead incurred is a 7 lakh. Incurred will be GLA. And thus we know entire production is sold at a profit of 10% on cost from. Let us first tally raw material. Raw material, I will be getting closing balance. What is the answer? 25, 2 lakh 50. What I will do with the difference in wages control? 2 lakh 10,000 is incurred. WIP has taken 1 lakh 80,000. What to do about 30,000? It will be transferred to factory. Factory overhead difference will be somewhat interesting. What is incurred? 90 plus 18, 7 lakh 50 minus 7 lakh 20. What is the difference? 1 lakh 30. It is under absorption of overhead. Again, it is not given. It is because of normal reason or abnormal reason. I told you if normal is not given, you should be taking abnormal. But here there is a problem. Here nothing was given and they have taken it normal. Just to verify the answer with book, we have taken it normal. Otherwise, if normal is not given, it should be treated as abnormal, right? If it is normal, it should be given. If it is not given, it should be treated as abnormal. It is because of abnormal reason transferred to costing P&L account. 1,38,000. Under absorption of factory. WIP also closing balance is given. So transferred to finished goods might not be there. This is transferred to finished goods, whatever is the balance. 1,80,000 plus 4,80,000 plus 1,80,000 plus 7,20,000 minus 2,40,000 minus 1,20,000. It is 12 lakhs. 12 lakhs rupees goods were manufactured and transferred to finished goods. Finished goods, there is no opening stock, closing stock. So there is no finished goods department, right? Whatever is processed is transferred to sales department. So whatever goods are manufactured are sold. 12 lakhs will be transferred to cost of sales. Cost of sales will be having 12 lakhs. If you have not prepared all this account, then also it is alright. This can be directly taken to cost of sales. Alright. What is the cost of sales? 12 lakhs or cost which is transferred from WIP. That is also 12 lakhs because there is no increase in cost in finished goods account. They say whatever cost is transferred from WIP, entire production is sold. See, entire production, no opening, no closing of finished goods is sold at a profit of 10% on cost. So what would be profit on this? 1,20,000. So what would be sales? 13,20,000. So sales will be 13,20,000. This will be transferred to costing P&L 13,20,000. Sales will be 13,20,000. Even if you have not prepared sales account, then also it is absolutely all right. You will be writing down 13,20,000 in costing P&L account credit side. This will be also transferred to costing P&L. and the balancing figure should be transferred to GLA. You should not be preparing GLA because they are not telling us to. When there is a loss, right? Loss will be transferred to GLA of had we taken this 18,000 normal loss as abnormal loss, our loss would be converted into profit. Had I taken this 18,000 rupees instead of normal, I have taken it as abnormal. Will my loss, ultimate loss, will be converted into profit? Or it does not make any difference? Yes? That is all right. I am saying that this 18,000 will not become zero. This 18,000 remains 18,000. Instead of normal, if I treat it as abnormal, there will not be change. Try to understand. If you are just finding out space to write down something 18,000 on debit side because you have written here credit side. If it is normal, I add it to factory overhead, not directly to WIP. Ultimately, it goes into WIP. And then if it is abnormal, I transfer it to costing P&L account debit side. So I write down either in factory overhead debit or costing P&L account debit. It will not make any difference to my final answer. This was 6.3. We are going to integrated system of cost accounting. For that, you will have to open yesterday's journal entry. We will be making some changes, some rectification that we have done today. Also, we will be understanding if it is integrated system of cost accounting. It is very difficult for you to write down along with me because you are not having any space to write down in your book, right? But I am just changing the accounts in this all journal entries. Particulars I am keeping it same. I will be giving this chart to you, right? Situation. You can see situation even from your book. Purchase of raw material. What is the journal entry we pass in non-integrated system? Raw material control account to GLA. It should be in integrated system, raw material control account to cash. And if it is purchased on credit, it will be return of raw material to supplier. Creditors account debit to raw material control. Please understand, wherever there is GLA, instead of GLA, some normal things will come like cash, creditors, debtors, whatever things comes normally in our financial books of accounts, that will come. Now we are preparing two separate books of accounts, financial and costing, or same? Same. So in our financial accounts, some accounts will increase. Normally, what you find out in your financial accounts? Cash, debtors, creditors, P&L account. This all is in your financial accounts. Now there will be some new accounts like stores, ledger, adjustment account, wage control account. Instead of wages account, it will be wage control account. Factory overhead account, which was not there in your financial account. Administrative overhead, selling overhead, WIP account, finished goods account, cost of sales account. Sales account you prepare even in your financial books of accounts. And there will be costing P&L account? No. Then cost of sales will go where? Indirectly profit and loss account. You will not maintain separate books of accounts for costing. Yes. If there is abnormal loss, it will be transferred to, instead of costing P&L, it will be termed as P&L account. If you are maintaining integrated system of accounting, it will be transferred not to costing P&L, it will be transferred to profit and loss account. Materials directly purchased by the production department. WIP control account debit. To GLA it is given, it will be to cash. Return to stores by production. Return of stores by production. It is the raw material control account debit to WIP. Next time I will be writing just this. It is the same. If raw material are transferred to WIP, it is WIP to raw material. If WIP transfers, that is production transfers raw material to raw material department, it is raw material to WIP. Whether it is integrated or non-integrated. These two accounts you prepare only in costing. You don't prepare in financial books of accounts. Raw material issued to production. Same journal entry will be passed. What is the journal entry? WIP to raw material. Raw material issued to factory for maintenance. Same. Normal loss of raw material. Yes, we have done this, right? Normal loss of raw material. We have written correct journal entry. It will not directly transfer to WIP. It is transferred to factory overhead control account to raw material control account. So it will be transferred not directly but indirectly to WIP, and it will be transferred to factory overhead. Abnormal loss of raw material. Instead of costing P&L, it will be P&L, but the journal entry will remain same. Wages incurred. Wages to cash. Direct wages absorbed by production. Same. Indirect wages absorbed by production. Same. Factory overhead incurred. Factory overhead to cash. Factory overhead absorbed by production. Same. Under absorption, absolutely same. Abnormal reason, absolutely same. Over absorption of overhead, exactly same. Administrative overhead incurred. Administrative overhead to cash. Administrative overhead absorbed. Directly related to production. I am changing the answer of non-integrated also. What we have written, administrative overhead directly related to production. It will be absorbed by, if it is directly related to production, it will be absorbed by finished goods to overhead. And if it is not directly related to production, it is cost of sales to administrative. Administrative overhead directly related to production will be absorbed by finished goods. Indirectly related to production will be absorbed by cost of sales. And for not integrated, it will remain same. Under absorption of administrative overhead, same. Selling and distribution overhead incurred, selling and distribution to cash. Selling and distribution absorbed, same. Cost of finished goods transferred from WIP to finished goods. Finished goods control account. Yes, you were correct. Finished goods control account to WIP. In non-integrated system, it will remain, integrated system, the journal entry will remain same. COGS transferred to finished goods will remain same. This will remain. Sales. What will be journal entry for sales in integrated system? It will be sales to cash. Cash to sales. Cash slash debtors to sales. If it is credit, debtors will be debited. Sales are transferred to costing P&L account will be same. This entry is not passed in integrated. You don't prepare costing P&L account, right? You prepare profit and loss account under your financial system. So abnormal loss of material, already we have written the entry. So I was planning to write it down again, but abnormal materials where it will be transferred, costing P&L, abnormal. And normal loss of material will be transferred to factory overhead. Other point also, administrative overhead direct will be absorbed by finished goods and indirect will be absorbed by cost of sales. Why I was able to write down same very fast? No cash, no GLA was involved, right? If GLA is involved, the journal entry will change. If GLA is not involved, that means other financial related accounts are not affected, so it will the journal entries are going to remain same. There is no concept in financial books of accounts of absorption. So absorption, under absorption, this all will be in costing only and will not be in financial account. So journal entry, whether it is integrated or non-integrated, it remains same. We are going to do 6.4. The following information is available from a company's record for the March. Opening balance of creditors. So creditors balance is given. Closing balance of creditors. Payment made to creditors. Opening balance of stores ledger control account. Closing balance of stores ledger control account. Wages paid for 8,000 hours, that is 4 lakhs. 20% relates to indirect workers. Various indirect expenses incurred are 60,000. Opening balance of WIP control account is 50,000. Inventory of WIP at the end of the month includes material worth rupees 35,000, on which 400 labor hours has been booked. The factory overhead is charged to production at a budgeted rate based on direct labor hours. Budgeted overhead cost was 20 lakh 80,000 for a budgeted direct labor hours of 1 lakh 4,000. Prepare creditors account, stores ledger control account, WIP control account, wages control account, and factory overhead control account. So I will be preparing just one more account, which is creditors account. Other accounts will remain same. This is C6.4. So all these accounts I will be preparing. Creditors, stores ledger control, WIP control, wages control, factory overhead control. Let us start solving it. Opening balance of creditors account is 25,000. Creditors account credit side by opening 25,000. Closing balance of creditor 40,000. Closing balance comes on debit side 40,000. Payment made to creditors 5 lakh 80,000. It is creditors to cash 5 lakh 80,000. Creditors to cash 5 lakh 80,000. Sir, why we don't prepare cash account? We prepare cash account in integrated books of account. Integrated books of accounts, we prepare everything to prepare trading P&L and balance sheet. But in this question, they have not asked us, so we are not preparing cash account. Opening balance of stores ledger control account 40,000. Closing balance of stores ledger control account 65,000. wages paid is 4 lakhs. To GLA, to cash, GLA comes in non-integrated, which is 4 lakhs. They have given us some working that will be useful. Various indirect expenses incurred is 60,000. This is factory overhead incurred to cash is how much? 60,000. Opening balance of WIP control account 50,000. And now are the points where your real test of costing will come into picture. Inventory of WIP at the end of the month includes material worth rupees 35,000 on which 400 labor hours has been booked. Factory overhead start to production at a budgeted rate. Factory overhead is charged to production, means is absorbed at a budgeted rate based upon direct labor hours. This company absorbs the overhead by traditional method or ABC method. And what is the base for absorbing the overhead? Only direct labor hours. What were budgeted overhead cost? 20 lakh 80,000. What were budgeted labor hours? 1 lakh 4,000 labor hours. What will be absorption rate? Chapter of costing. What is the absorption rate? 20? 20 rupees per labor. This is what this 2 points says us. Alright. Can you tell me how much wages is paid? Rupees 4 lakh? How many total hours workers have worked? 8,000 hours. What is wages per hour? What is wages per hour? 4 lakh divided by 8,000. It is 50. 50 rupees. So laborers are paid 50 rupees per hour, right? Let me try to close everything, and during closing I will be teaching you 1 or 2 important points. Let me first close the creditors account. Creditors will not be affected, believe me. Creditors 25,000, 40,000 and cash paid is given. So this will be purchase of raw material. Whatever is the balance is purchase of raw material. This is 6 lakh 20 minus 25,000, that is 5 lakh 95,000. And if the raw materials are purchased, it will be going in raw material control account. 5 lakh 90 raw material. I am also closing raw material account and I will be transferring it to WIP. I am assuming there is no indirect material. I will be transferring it to WIP. 5 lakh 95,000 plus 40,000 minus 65,000, which is 5 lakh 70,000. Wages will be also easy. We know how the wages is paid. It is 8,000 hours into 50 rupees. Now they have given in the bracket. It is very easy. 20% relate to indirect workers. So 80% relate to direct workers. So 80% is direct wages. What is 80% of 4 lakh? 3 lakh 20,000. Where the direct wages should be transferred? To WIP. WIP 3 lakh 20,000. and remaining 80,000 will be transferred to factory overhead, which is indirect wages. How much is the factory overhead incurred? 80 plus 60, 1 lakh 40. How much factory overhead will be absorbed? Here the figure is not directly given. But believe me, they have given you absorption technique. They have given you absorption technique. How much factory overhead or how much overhead you absorb? 50 rupees per labor hour worked. How many labor hours are worked in current year? How many labor hours are worked in current year? This should be absorbed. How many labor hours are worked in current year? Not current year, it is current month probably. Current month, how many labor hours are worked? 8,000. What is the absorption rate? Don't take it 50. Huh? Why 50 is not an absorption rate? What is 50 then? What is 50? It is wage rate. When the laborers are paid, they are paid 50. When the overhead is absorbed, it is absorbed based upon labor hours and it is 20 rupees per labor hour. That is multiplied by 20 will be absorbed. It is 1 lakh 60,000. This was one good point. But let us change the answer. It says it should be rupees 20 per direct labor hour. How many total hours are worked? 8,000 hours are total hours, out of which 20 are indirect. So 20% is indirect, which will be 1600. This will be 6,400 will be direct labor. Even if we had done with 8,000, believe me, our answer is correct, but we are just rectifying our answer by 6,400. $6,400 into 20. What is the answer? 1,28,000. This is 1,40,000. This is 1,28,000. So this will be 12. 1 lakh. Creditors is already tallied. There is only one point, which is WIP. Please understand, whatever comes in WIP should be regarded as closing stock. This cannot happen. It is not possible to assume that in one factory no finished goods is manufactured. All finished goods are WIP. So two figures are missing. Transferred to finished goods and closing WIP. Where closing WIP hint is given. Inventory of WIP at the end of the month includes material worth rupees 35,000. 400 labor hours have been booked. Alright. So closing WIP includes material, labor and overhead. It is possible In WIP, some material is used, some labor is used, and some electricity is used. It is 100% used or some percentage used. So we have done it in process account, right? Some percentage used. How much material is used in WIP closing stock? 36. It is 35,000 rupees. They have not given how much labor rupees is used, but they have given how much labor hours are worked on this WIP. How much hours are booked? What is meaning of booked? You have written that this much labor hours are worked on this particular WIP stock. How many labor hours? 400 labor hours. So what will be labor cost? 400 into 20. No. Into 50. Which is how much? 20,000 rupees. So you know that on this WIP 400 hours are used. We don't know overhead, so we will be taking it 0. No. Overhead is absorbed always based upon labor hours. We know the labor hours. What are the labor hours? 400. What is the absorption rate? 20. So 8,000 rupees I will also book of overhead. This will be 63,000 rupees, which will be closing WIP. I will be getting how much will be transferred to finished goods as a balancing figure. 50,000 plus 5 70,000 plus 3 20,000 minus 63,000 877,000. One 128. Sorry, we have not written this. This should be written. Factory overhead absorbed by WIP. Second effect we have forgotten. 1,28,000 should be written over here. Factory overhead absorbed. So 8,77,000 will increase by 1,28,000. 10,05,000. A good question because it includes concept of costing also, right? The basic concept of overhead, absorption of overhead, wages also. We are going to next question, which is extremely easy. 6.5. And most probably they will not tell you to draw books of accounts. There are less number of units in India who prepare costing books of accounts. But this might be asked, journalizing the entries. Because even if they ask this question, they'll have to ask it for 8, 10, 12 marks. Journalize the following transaction assuming cost and financial accounts are integrated. Integrated or non-integrated? Integrated. Material issued, direct and indirect. You need to pass journal entry not of material purchased, of material issued. So what will be material issued direct journal entry? Material are issued directly to production. WIP control account to raw material control account. 3,25,000. Should you write down the narration? Whenever you write down journal entry, always write down narrations. Can you help me out? Indirect material issued. What will be the journal entry? Indirect factory overhead. Factory overhead control account debit to raw material control 1,15,000. Allocation of wages 25% are indirect, 6,50,000 into 25%. 1,62,500 are indirect, and so how much is direct? 4,87,500. Direct wages absorbed will be WIP control account to wages control account. 4,87,500. 4,87,500 being direct wages absorbed by WIP. Indirect wages will be absorbed by factory overhead 162,500. Factory overhead control account to wages control account 1,62,000. Fifth is under or over absorption of factory overhead. Factory overhead over absorbed 2,50,000. Factory overhead over absorbed. All right. If it is under absorbed and if we transfer it to costing P&L account, can you tell me what is the journal entry? Costing P&L to factory overhead. So factory overhead is credited in case it is under absorbed. You can also visualize the accounts, right? Factory overhead. If it is under absorbed, you will have to write it down on credit side. So factory overhead will be credited. If it is over absorbed, factory overhead will be debited, right? If it is over absorbed, factory overhead account debit. It is 2,50,000. Factory overhead account debit. To what? Costing P&L. Over absorption, there are different ways, right? If a negligible amount, you can ignore. If you want to transfer it to costing P&L account, you can transfer it to costing P&L account. If you want, you can carry it forward to next year by creating a reserve. So these are the three effects of over absorption of any overhead. If nothing is given, I will be transferring it to costing P&L 2 lakh. Okay, you can write down P&L. It is integrated, so it will be P&L account. You may write down the note. It may be transferred to next year by creating a reserve. Under absorption of administrative overhead. Under absorption of administrative. Under absorption means the account will be credited to administrative overhead control. What should be debited? If they costing P&L, it is under absorption. Under absorption, if it is for abnormal reason, then costing P&L. If it is for normal reason, then it is finished goods or cost of sales. Whether it is given or not. It is given, not given. Normal is not given. See, always apply this except that wages, right? If normal is not given, it is always treated as abnormal. Try to understand anything which is a normal loss, normal under absorption should always be given by headquarters to you, right? That it is a normal loss. So it will be treated as a normal loss, will be transferred to P&L. Write down always assumed to be normal. It will create a good impression to paper checker. Assumed as abnormal. Payment to sundry creditor, no entry. Or you will be passing an entry. Yes, it is integrated. You will be passing. If it was non-integrated, then no entry. In costing books of accounts, you don't pass any entry. Payment to sundry creditors, if it is integrated, it is creditors to cash. Whatever is the figure, 1,50,000. Collection from debtors is cash to debtors. This was 1,50,000. This is we are solving C 6.12. Journalize the following transaction in cost books under non-integrated system of accounting. Credit purchase of material. Help me out with the journal entry. Raw material control account debit to cash to general ledger adjustment. Sir, in examination, can we write down GLA? Yes, sir, but it is a good idea. First time you write down full general ledger adjustment account and in bracket write down GLA like this. General ledger adjustment account and in bracket write down GLA 27,000. Now onwards you can write down GLA, right? This is a good idea. Even if you write down directly GLA, I don't think your marks will cut. Manufacturing overhead charge to production. Factory overhead charge to production. Manufacturing is a factory overhead charge to production. WIP to factory overhead control account. Selling and distribution overhead recovered from sales. It is nothing but selling and distribution overhead absorbed by cost of sales. Recovered from sales is you have done your sales and you have recovered your selling and distribution overhead. So it is selling and distribution absorbed. Selling and distribution overhead is absorbed by whom? Cost of sales account debit to selling and distribution overhead control account. Which is 4,000. Indirect wages incurred. See, when they have specified that it is indirect wages, I will be passing for incurrence also and I will be passing for absorption also, because they have not written wages incurred. They have written indirect wages incurred. When it is incurred, what journal entry I pass? Wages control account debit to GLA is how much? 8,000. And where indirect wages will be absorbed. Factory overhead control account debit to wages control. 8,000. Of course, this journal entry is for absorption. Even if they have not asked, we will be passing a journal entry because they are specifying it is indirect wages. Material returned from production to stores. Stores to WIP. Stores or raw material control account debit to WIP, which is 9,000. And this is end of the questions which are having integrated concept, non-integrated concept. We are only pending with one topic in this particular, that is reconciliation between cost accounting and financial books of accounts. For that, in next lecture, you should be ready with cost sheet. You should be revising cost sheet and coming in next lecture.